And we're going to talk about the markets, of course, but we're going to do that by way of some moves from Joe Terranova, who is exiting several financials positions, which are quite interesting to me. You sold Morgan Stanley, you sold Visa, and you sold Mastercard. Why? So let's start Morgan Stanley first.
Well, I sold each of them personally, and that's important to understand. And I want to be clear on something. First of all, Morgan Stanley had a small profit in Visa, Mastercard. I've owned them for much longer and had a strong profit in them as well. But these are personal sales, and they are not really specific to the individual company. It's more about macro conditions and the overall exposure that I have. So the JOTI ETF, I mean, if you look at the JOTI ETF and my holdings of Virtus Investment Partners, probably 90% of my equity holdings are in each of those. So looking at what we have, 23% exposure to the financial sector, I realized, look, personally, given what I'm seeing within the marketplace, we'll talk about that in a second, from a risk management standpoint, I've got too much financial sector exposure. Do I want to sell Goldman Sachs? No, I don't, because I think Goldman Sachs is ahead of Morgan Stanley in terms of re-rating itself, seeing the multiple expansion, and I like that investors are coming in and beginning to recognize that. So I think there's further appreciation ahead for Goldman Sachs.
Goldman's been around a new high for weeks, right? It's been on a pretty torrid pace.
And I think when I compare the two companies, I think Goldman Sachs has more revenue levers, if you would, that they could pull versus Morgan Stanley, which at the current valuation, I think really has to prove himself. And I think the CEO, the new CEO, Ted Pink, has to prove himself as well.
So Visa, MasterCard, and some of these, payments companies we have focused on over the last few weeks for being on these long winning streaks, right? MasterCard has been down 6 straight days now, and it's primed for its 7th straight down day. So there's been a reversal, probably as yields have started to rise again. Those stocks have gone down.
Yeah.
So I couldn't help but think when I saw these moves that it was correlated to the fact that yields up, not good for financials. And that's why you were exiting these positions.
That is 100% the macro reason, the motivation, if you would, that I'm making these moves. Yesterday's auction, wasn't impressed with the 2- and 5-year auction. I know we have another auction today, a 7-year auction, $44 billion. I don't like the market response to the auction yesterday. You have a 2-year bumping up back towards 5%. You've got the 10-year backing up towards uncomfortable levels. I think the high for the year is somewhere around 474. So I think when you have that type of condition in front of you, you have to manage the risk that you have.
Okay.
And I have significant exposure in the financial sector. And by the way, JOTI still owns Visa and MasterCard.
Well, JOTI can't do anything because JOTI's tied up until the rebalance. But personal JOTI can do whatever he wants. And therefore, it's a bit of a hedge, as you said. You made that point. Steph, so you own Morgan Stanley. Wondering what you make of this move by Joe.
Well, the stock is up 39% since October lows, so he's taking some profits. I totally understand, and he wants to get a little bit less overweight. He's still overweight financials. When you talk about the yield curve, that is certainly a headwind for the for the banks, not the insurance companies, but for the banks. And so that's a headwind. However, the stronger economy is a tailwind. And so last week, we've got better durable goods. We got better PMIs. We continue to have amazing initial claims that defy logic, to be honest. And then you have better confidence out of the blue. So I think you're running it around something like 3.5% Atlanta Fed tracker. Maybe we're not that. Maybe we're 2.5%, 3%, but that will be a nice tailwind. For Morgan Stanley specifically, their last quarter was actually quite good. Investment banking was up 16%. Investment management was up 17%. Wealth management pre-tax margins, 26.3%. These are really good numbers. I understand the new CEO has to prove himself, but I think he did a very good job last quarter. and the stock has lagged substantially to Goldman Sachs. It's a little bit more expensive at 14 times versus 13 times for Goldman, but it also has not participated. And I think it's the hangover of the CEO transition, to be honest. And 2 quarters ago, it wasn't a great quarter, and that was the CEO's first quarter. So I think there's a lot of puts and takes, but I think that if the economy is going to stay strong, Morgan Stanley should do just fine. And I haven't even mentioned capital markets as well. So I know you get all that exposure at Goldman,
right,
but I'm still very much in favor of either of them.